Trump's 3 crypto bills change everything. Imagine waking up to a world where the rules of money have been completely rewritten while you slept. That's not a nightmare.
That's the last 72 hours. Hi, I'm Mai, and welcome to Bitcoin Basics. Today, we are going to break down the 3 bills to save you from getting crushed by the big players.
While you were sleeping, President Trump signed the Genius Act, the House passed Clarity, and the Anti-CBDC Act was pushed through. The headlines are screaming, "Crypto wins!" But they're not telling you the whole story. The real question is, who wins? You or the institutions that just got a government-stamped invitation to the party? If you don't understand what just happened, you're about to become their exit liquidity. Remember the sting of Terra USD, a billion-dollar project evaporating overnight while regulators pointed fingers? That chaos was a double-edged sword. It was risky, sure, but it was also the electrified fences that kept the Wall Street titans at bay. They don't play in sandboxes without a rulebook. Well, the rules just arrived, stamped, sealed, and delivered by Congress. The giants are waking up, and if you're still playing by the old rules of the Wild West, you're about to get run over by the railroad they're building. Genius Act, signed on July 18th, the Genius Act is the red carpet rolled out for big money. Every digital dollar must be backed by a real dollar in treasuries or insured deposits. No more smoke and mirrors. This legitimizes the game, but only for the biggest players. Banks, credit unions, and state-approved giants. The base layer of crypto just became their territory. If an issuer fails, they've made sure the institutions get their money back first. Lie about your reserves? That's federal prison time. The net result? Yes, your USDC is safer. But don't miss the real story. This isn't just about protecting you. This is the velvet rope being lifted for the biggest money on the planet. Pension funds and corporate treasuries aren't coming to join the party. They're coming to take it over. Think this just puts the squeeze on Tether? That's the sideshow. The main event is the tidal wave of institutional cash about to flood the market. You need to see where it flows first.
Subscribe, and I'll break down these new reserve reports the second they go public so you can see what the whales are doing, not just what they're saying.
Clarity Act, passed by the House. On July 17th, this isn't just a rulebook. It's a treasure map drawn specifically for Wall Street. It creates a simple test. Assets like Bitcoin and Ethereum are commodities. No more legal gray areas for the big firms to worry about. It establishes new, regulated exchanges, basically a Wall Street 2.0, with all the protections and structures that make institutions feel safe. It mandates that customer funds be held one-to-one, a rule designed to give billion-dollar funds the confidence to dive in. It even gives projects a 12-month safe harbor to launch without legal fear. This isn't a map for you. It's a government-approved blueprint for the financial elite to launch projects, capture markets, and build their empires on this new terrain. They get a clear path forward. You can't afford to be left wandering in the dark. Anti-CBDC Surveillance State Act, also passed on July 17th. This bill seems like a win for privacy, but look closer. It blocks the Fed from creating a retail digital dollar. It stops the government from issuing programmable money that could be shut off at a whim, pointing to China and Canada as a warning. Instead, it pushes forward privately issued, government-regulated stablecoins as the future. So you dodge the bullet of direct government surveillance cash. Great. But while Congress barred the front door to the Fed, they swung open the back door for the financial giants. They've stopped the government from freezing your assets, only to create a system where the market can be moved by forces so large they can wash you out overnight. Your transactions are safe from the Fed, but are your investments safe from the whales? This isn't a forecast. The ground is already shifting beneath your feet. While you've been watching the news, the smart money has been moving. 1. The starting gun has been fired for states like Wyoming and Texas to become the new hubs for institutional stablecoin issuance. 2. The discount on Grayscale's Bitcoin Trust is vanishing. That's proof the big players are piling in, preparing for the next leg up. 3. Venture capital that fled overseas is about to come roaring back to the US, funding the very projects the institutions will own. The crypto Wild West is over. The age of institutional crypto has begun. These laws aren't just guardrails for your wallet. They are superhighways built for a tidal wave of institutional capital. In this new world, you can either understand the rules of the road or become roadkill.
The choice is yours. The giants are writing the next chapter. If you want to make sure you don't get written out of it, hit subscribe and ring the bell. You can't afford to be left behind. Thanks for watching.